Boom, boom. So good afternoon, everybody. I'm BikerboyDee with Zamunda Profit Squad, and I welcome you to Zamunda University. I want everybody to pay attention, take notes, and please, please, please ask questions. Ask as many questions as you want. Ask for examples. Ask me to look at a chart that you may have questions about, but please ask questions. So with that being said, let's get into it. So today I will be teaching you guys about Fibonacci retracement. So for Fibonacci retracement, there's something called a Fibonacci sequence. And a Fibonacci sequence is a set of numbers whose terms are the sum of the previous two terms. So in other words, if you add 1 plus 1, that equals 2. If you add 2 plus 3, that equals 5, 5 plus 8, 13, and so on and so forth. So that is the sequence of Fibonacci. That's the Fibonacci sequence. So when you take that sequence and you make squares out of them, it creates like this spiral looking, this spiral figure. So a 1 by 1 equals a 2 by 3. A 3 by 5 equals a 8 by 13 because you add the 8 and the 5, and that gives you that. Not very important, but you know, you get some background knowledge. So Fibonacci sequence isn't just some made up figure. It's actually found all throughout nature. It's found in building structures, as you can see, flowers, our everyday life. Even our fingers, they bend at Fibonacci sequence points. So Fibonacci is embedded in everything in nature, real life, and just pretty much anything you can think of. Fibonacci is in the Fibonacci sequence is built into it. And here is another example of a Fibonacci sequence spiral. This is a really good example. I like this example. Big T. So within the Fibonacci sequence, you have something called the golden ratio. And this is also known as phi. Now, phi is a number that is equal to approximately 1.618. You get this ratio by dividing a number in the sequence by its preceding number. So for instance, if you divide 5 divided by 3, you get approximately 1.618. 13 divided by 8, you get approximately 1.618. Now, the larger numbers you divide, the larger numbers you have this ratio for, the closer to 1.618 you get. So if you divided 55 divided by 34, it'll be closer to 1.618 than 3 divided by 2. So once again, that's, none of this is important, but I think it's nice to know the origin of things, so you know where it comes from and how it can be implemented in trading. So Fibonacci retracement levels, which derive from the Fibonacci sequence, are horizontal lines that indicate where support and resistance are likely to occur. Each level is associated with the percentage. The percentage is how much a prior move in the price has retraced. The Fibonacci retracement levels are 23.6, 38.2, 618, which is that golden ratio, and 78.6. The 50% is also used, but it is not a Fibonacci sequence. 50% is the equilibrium for anything, so that's why that's thrown in there. Okay, let's look at some examples on TradingView. Can everybody see my screen okay? My chart? Check the chat. Yep. Okay, cool. Everybody can see it. So before we get into exactly how to draw them on a chart, I want to show you how you can implement the Fibonacci retracement levels. So before I do that, I'm going to show you the levels that are most commonly used and the levels that I use. So the first level would be your 0.236. Now the 0.236 isn't that significant. It's not a significant level. The only time it's really significant is if you're already in a trade, and let's say you're in a swing trade and you have 3 green days and you finally get a red day. You would want to see it make a slight retracement to a 0.236 and continue in the trend that it was going in. So this would be an indication of a very slight retracement going back into trend. The 382 is a level of a reversal. So the 382 also indicates a strong trend. So if something retraces to a 0.382 level, that is a strong trend, and it has a good likelihood that it will reverse back into trend. So a TTO, in other words. Now your 0.5 is a very high likely level of reversal. So when something comes back down to a 0.5, it's likely to bounce off the 0.5 and then go back into the original trend. The 0.618 is, like we mentioned before, that comes in the golden ratio. The 618 is the most likely level of a reversal back into trend. So when you see something come to a 0.618, it has a very, very high likelihood that it will reject that level and then reverse back into the opposite direction. The 0.786, this would be your last line of defense. So if something breaks through a 0.382, it breaks through a 0.5, it breaks through a 618, and then it gets to the 786. If it does not reject the 786, it is more than likely going to reverse and continue in a downward trend. So if you see something break below a 786, you can almost bet that it's going to continue down. It really doesn't have a chance to reverse and go back up. So how I want you to think about this is like tug of war. So we have a 0.5, right? So if you think about tug of war, let's say you have 6 people on the left side, 6 people on the right side. The people on your left side are your buyers. The people on your right side are your sellers. So they're fighting back and forth, right? So your 382, if they came to a 382, that means the buyers have a lot of control and they have a less distance to go to win, right? You have tape in the middle or you have something in the middle to show you who's winning. The 0.5, if it's at a 0.5, that's when you see that tape in the middle. It's not really moving. Both sides are pretty equal. So whoever takes control, they're going to be the ones that win. The 0.618, that will be similar to, you ever seen tug of war when, you know, one side starts winning a little bit, they have a little bit of momentum, and then the other side just pulls out of nowhere and they win? That would be like your 618. That means that the sellers had control, they reached this 618 level, and then the buyers took it up to go back into trend. And then the 786, you just holding on for dear life. If you don't make a push in that last little second, that last little momentum bump, then you lost. So that's a good way of looking at it. To bring it to like real world examples. So I'm going to show you how to draw fibs. And there's a couple different ways that you can do it. So last week, we talked about TTOs and reversals. We talked about swing highs and swing lows. So one way you can draw a fib is each leg. And what I mean by leg, every time you have an impulsive move like this and you have a retracement, that would be considered a leg. So let's label that. And I like capital letters. Right? So this would be our first leg. So if you were watching this and you seen that we had bullish momentum and then we had a reversal candle, let's say it's a shooter or it's a bearish engulfing candle, which would be a 3-bar, or some type of reversal signal right here, and we started pulling back, we will want to see where is it pulling back to. So what we do is we would take our fib, in an uptrend, you go from the swing low to the swing high, and then you would see where this possibly could reverse. So where we really want to see a reversal is the 0.5 and the 0.618. This area right here is known as the golden zone. So anything in this zone has a very high likelihood of reversing and going back to the upside. It also offers a high risk to reward because you can set your stop loss below a 618 with the knowledge that you know that if it bounces off a 618, more times than not, it goes up. So if it continues down, you probably don't want to be in that trade because you could be setting up to continue going down. So the 618 and the 0.5, they give you a high risk to reward ratio. They also let you buy your options or the stock at a discounted rate. So you have to think, when we had this impulsive move right here, people were buying along the way. So that means people started buying up here, they were buying up here, they were buying up here, and then people started taking profit. They started selling off a little bit. People might have tried to short. They had bad time shorts, so they're selling right here, but you still had those buyers that were right here too. So if you buy it at a right here, you have it at a discounted price. Instead of those people who bought it up here, you bought it down here with the anticipation that it will go back up to the upside, aka TTO. So that's why the strat is a beautiful strategy, because we can buy things at a discounted price. Now with Fibonacci retracement tool, you don't want to use it solely by itself. You want to use it in confluence with something else. So like a support or resistance, or the strat is pretty much already built into it. So if you use this with the strat, let's say you have a hammer off of the 0.5, right? You know that you can use a 2-2 reversal back up to the upside. So you want to use it with something else. You want to have some type of confirmation that it's going to go back into your favor. You don't want to just use it by itself. So that's one way of doing it, is using it from a one leg, from a swing low to a swing high. And to find the Fibonacci tool, you come over here to your tools on the left side, you click Fib retracement, and I will bring up the values that I have. If you have a notebook or whatever, you can write them down, and I will show you the values if you missed them. You can customize this however you like. These are the numbers that I use, but you can make them any color you want. You can make them, you can make it a background if you want to, but I'll give you guys a second. I'll leave these up if you want to screenshot, write them down, whatever the case may be. But these are the value levels of Fibonacci retracement. Do we have any questions about that so far before I continue?
Hey, so does it matter if the values are crisscross like that, or can you just go down that first line with all those same values, or you have to crisscross them like that?
It doesn't matter. You can have them down in a straight line, because all
Okay.
it's going to do is, once you check it, it's going to make it goes from least to greatest. It doesn't factor in if it's on the left or the right.
Okay. Okay. Cool. Thank you.
Yep, no problem. Good question. And I like to extend my lines too. You don't have to. I like to extend my lines right, so I can see future price action. But if you don't want to, you can have them just wherever they're at and drag them over if you want to. But I like to extend my lines right, so I can see future price action. Okay. So with this strategy, like I said, you can do it every leg. You can put your
show us how you drew that again really quickly.
Yes, I can.
I always mess up when I do it.
That's okay. So in an uptrend, and it's very important to note that it's in an uptrend, you go from the low to the high. That's only in the uptrend. And I'm going to show you a downtrend also. But in an uptrend, you go from the swing low to the swing high. And you know you've done it right if the 0 is at the top and the 1 is at the bottom. And the numbers are ascending going downward. So they get greater as you go down. Because you have to think, you're looking for the levels. You want them to look like the 236, the 382, the 0.5. You want to see where we retrace to. So you want these numbers in this direction. So in an uptrend, you know you're doing it right if your 0 is at the top and your 1 is at the bottom.
Awesome. Thank you.
Okay. So now that we have that leg out the way, let's say we started continuing our uptrend. So then we have our next leg. It goes from here to here, right? Then next thing you do, you could just put that Fib retracement from this swing low to this swing high and see where it comes down to. And you can just keep continuing to do that. So right here, we have another area of interest where we could possibly have a reversal back up to the upside. So let's say we do get that reversal from here back up to here, and then it retraces again, right? Then you would just walk it back up. You would just walk it up again. and see where you would get a potential bounce. And the 382 is an area of potential bounce. The best areas for a bounce to back up to the upside is the 0.5, the 618. And if it gets down to a 786 and it's showing you strength to go back up to the upside, that's also a good place. I usually don't look for 786s, but if I'm presented with the 786 reversal back up into the upside, I will take it. But that's not something I necessarily look for. Okay, so this was leg one. This was leg two. And then this was leg three. And all we did for each leg is we wanted to see where price could retrace to. That's why it's called the Fibonacci retracement tool. So we went from a swing low to find this retracement. We got an area of interest. We will look for a reversal candle back up to the upside. Then it took out this swing high. It took out this high right here, which is very important. It has to do that. So when you have a reversal candle, for it to be a successful TTO, you want it to take out the previous high. Now, if you're day trading and let's say you have a strat PT is right here, cool, you made your money for today. But your overall target where you will want to see price go to continue the uptrend is it has to take out this high. You have to have higher lows and higher highs. So this was the previous high. This low is higher than this low. We have to take out this high next to continue an uptrend, which it did, right? So we've seen it retraced here. Cool. Still in it. And we're going to take it to this next high. That should be your immediate overall target. If you have runners, you can continue the trend. Now, if we're looking for the next leg, the next point of interest, we will go from this swing low. So this swing low right here to this swing high right here. And that will show us where the next point of interest is. We get another reversal candle or reversal pattern. We take it back up. And once again, we want to see it take out this previous high for it to be a successful TTO and continue trend. If you need to draw trend lines to help you, that is also a smart idea. So you can use it in confluence with your fibs. So like, for example, right here, we went up, we started retracing to a point of interest, that 0.5 to 618 zone. It's also a trend line right here, which serves as a support. So if we bounce off a support and a fib entry, that is two confluences that we can put together for a better probability trade back up to the upside. Does that make sense to everybody so far? Check the chat. Somebody said, why are those specific numbers the values? That's not really that important, but the 0.5 is in a fib sequence. The 618, like I mentioned before, that is the number you get when you divide a number in the sequence by its preceding number. So 8 and 5, that's how you get that number. 382, I believe, is a number in the sequence and two numbers previous of it. And then the 236 is a number in the sequence and three numbers previous to it. So that's where the values come from. Not that important to know, but if you must know, that's where it comes from. Okay. So the next way to use fibs is if you want to capture the overall move. So the first example, we were going for each leg retracement. Now, as we know, stocks doesn't just go straight up forever. They aggregate their way up, and then at some point they reach exhaustion and then they start coming down. So when they start coming down, you want to see what areas that it could possibly come down to after a downtrend to catch the reversal back up to the uptrend. So if we had this run up like this, and then we started seeing that we started putting in lower highs and lower lows, right? We want to see key areas that we may retrace from to continue a reversal back up to the upside. So to do that, instead of going from each leg of swing low to swing high, you would go from the original swing low, the lowest swing low that started the move, to the most current swing high that ended the move. Okay. So I went from this low, I skipped over all of this price action, and then I went to the last high. So I'm gonna say that one more time so you guys see it. I went from this low right here to the high of the overall uptrend. So what that does is that shows me where price could come down to, possibly catch a reversal here to go back up to the upside and start a trend, a series of higher highs and higher lows. Okay. And if you can see, I mean, that was just my path tool, but I hit the 0.5 to a T. So does that make sense to everybody so far before I move on? Before I show you before I show you a downtrend, does that make sense to everybody? Showing a retracement for a leg versus showing the retracement for a entire move. Check the chat. Okay. Yes, I can say that one more time. I know that was probably kind of fast. So in the first example, we went from a swing low to a swing high of a leg, right? And what we were looking for out of that was a retracement for an entry to continue up into the next leg. We wanted to target this high right here, and we got our move. Now, if we wanted to add into our position, or let's say we missed this move right here, and we want to see where the next move up is, then we would take our fib from this swing low of the previous leg to this swing high. We would see where it retraces to, and then we would take that move back up. We would take that move back up to the upside. Now, if we see that we start making lower highs and lower lows, which signifies a downtrend now, right? If we start seeing this action going on, we would want to see the overall move, because now we don't care about the legs. That's irrelevant at this point. We want to see the overall move, this range. Think of this as a range. So the bottom of our fib is at 351. The top is at 372. So that is a range. We want to know where are the likely points of reversal within that range. So to do that, we go from the beginning of the range to the end of the range. And then we start looking for possible reversal points. Our points of interest would be the 382. Our points of interest would be the 0.5. Our points of interest would be the 618. And if it gets down to a 786 and reverses from there, that will also be a point of interest. Does that answer your question? Okay. So now I'm going to show you a downtrend. Get rid of all of this. So we know in the uptrend, we have a series of higher highs and higher lows. Now in a downtrend, it's the opposite. We have a series of lower highs and lower lows, right? So the same concept applies. So if we were looking for a leg, if we were selling off, this was bearish, right? We had some type of pullback right here. Let's say we had a pullback right here. We would want to see, where did that pullback happen for us to catch a reversal back to the downside? So in a downtrend, you attach your fib from the top of the swing high to a swing low. So in an uptrend, you attach from the swing low, the bottom, to the top. And in downtrend, you attach from the top to the bottom. And as you can see, the values have reversed. You know you're doing this right when the 1 is at the top and the 0 is at the bottom. That's how you know you've plotted it right. So you can't just go from the bottom to the top in every trend. In an uptrend, you have to go from the bottom to the top. In a downtrend, you go from the top to the bottom. Let me check the chat. Okay. So now this is our first leg. So this is leg number 1 of the beginning of a downtrend. If we have this retracement right here, and it's around the 618 area, which is a point of interest, we will be looking for, if you're a strat trader, if you're a support and resistance trader, you will be looking for some type of reversal off of this area back to the downside. So what you will want is for it to reverse from there, come back down, creating a new leg like that. So this here, you can catch a reversal move to target this low, this swing low now. So for it to continue as a downtrend, you want to take out previous lows. This was a complete, this completely took out the previous low. So you will be able to take profit here. You can leave runners, however you want to play it. But this will be your overall target, that previous swing low. Did I lose anybody there? And I'm going to stop to ask questions a lot because I know this can be very confusing, especially if this is your first time.
What happens if it just hits the 382 there? Is that what does that signify if it doesn't go as up to the 618? Is that still
yes? Yes.
You just let that play out, or
yes, to answer your question, the 382 is also a point of interest. If it hits a 382, it is if it hits a 382 and it's showing signs of a reversal or a TTO at the 382, that is a very strong trend.
Okay.
So the further down it goes, it's a weaker trend, but it's still a higher likelihood for reversal. It's a likelihood for exhaustion in the opposite direction. And they also offer the best risk to reward. So if you took, let's say you took a 382, like let's say it got to a 382, right? And it started coming down a little bit, but then it played around a little bit, and then it went to a 0.5, and then it went to a 618 before reversing and coming back down in the intended direction, right? Since you bought it at not such a discounted price,
Gotcha.
you will be at a loss until it makes its move.
Makes sense.
So you can play a 382, but you definitely have to look what the chart is telling you. If it's setting up for a reversal off of 382, that is still a good point of interest to take a trade.
Gotcha. Thank you.
No problem. So yes, this would have been a successful one. We had a 618 bounce. It took out the previous swing low right here. And now it is setting up to do the same thing. So I will show you real examples. I like to use the path tool first because it kind of just simplifies everything. Candles can be confusing sometimes. So
you mind doing it on Amazon?
Yeah. After I go through these examples, I'm gonna actually take requests from charts from you guys. So
okay, cool. Okay.
I will keep that in mind. So now I'm going to ask you guys questions. So first, we're going to look at this downtrend right here. Okay. So we see we have an obvious downtrend, and let me turn my magnet back on. We have an obvious downtrend, correct? So since we are dealing with a downtrend, how would I want to use my fib? Would I want to take it from the low to the high, or would I want to take it from the high to the low? Can anybody answer that for me?
High to the low.
High to the low.
High to the low, exactly. So this is all, this price action right here is all hindsight. But let's say we first started seeing signs of reversal, right? So right here, we had an uptrend, correct? This was an uptrend. We were making a series of higher highs and higher lows. But over here, we started noticing, hey, when we had this low right here, we did not take out that high, which is a requirement to continue the uptrend. We did not take out this high. We put in a lower high. So that is the first sign of a downtrend, of a reversal back to the downside. So once we put in this lower high, and then it confirmed it by it took out this lower low, it took out this previous low, that confirms the downtrend, right? So now what we want to do is when we notice this downtrend, we want to see what are possible areas for it to retrace whenever they start buying it again to sell it back off. So what we would do is, if we're looking at this leg, we will go from this high, like you guys said, to this low. And as you can see, we have the 0.618. And I marked mine gold because it's the golden ratio. This is the golden zone right here. So as you can see, we had a 618 rejection right here. Not only did we have a 618 rejection right here, we also rejected a trend line, a downward trend line. Okay. And if we look to the left, let's see if we have a support and a resistance. So right here, we have this was a previous resistance right here. And you can see how we reacted to that level, right? We also had, this was a strong resistance. So once we broke through this was once resistance, we broke through, it was supposed to become support after that. It broke through once again to the downside. Then it came back up. It didn't even retest it. It broke through. So if we seen that we had a 618 right here with this big shooter candle, we would be plotting to take this back to the downside. So I would be thinking we had a 618 rejection. We have a shooter candle, which is a sign of reversal, right? And we also are putting in lower highs, lower lows. So if we go 2 down after this, then I know my immediate strat target would be this right here. This would be my immediate strat PT. But if I wanted the overall move, this previous low right here would be my overall price target. My overall, this is where I want price to go. Does that make sense so far?
Perfect.
If you are charting the fibs on the daily, what time frame are you looking at when you're actually in the trade, looking to get out? So they said, if I'm charting the fibs on a daily, what time frame am I looking at when I'm actually in the trade? So when I'm looking at fibs like this is my prep work. This is the night before, my nightly routine. I'm seeing what things are hitting a 618 or what I'm looking at actionable signals and things like that. I'm building my confluences. When I'm actually in the trade, I use them the same exact way, but on a lower time frame. So once I enter, I'm looking for possible areas for retracement to either take profit, to add into a position, or to know to just stay patient and hold in that position because it's only making a retracement. It's not reversing on me. It's just making a pullback. So once I get down to a smaller time frame, I do the same exact thing, just on a smaller time frame. So yes, we had our 618 bounce here. It flushed. This was a successful trade. We took out our liquidity down here. This was a successful trade.
What lower time frame do you generally gravitate to, or do you use multiples?
I use multiple. So when I'm trading, I'm looking at 4 screens. That's preferably how I like to do it. I'm looking at I really like moves off of the 15-minute. The 5-minute gives a lot of fake outs. But with the 5-minute, I'm also looking at a 5-minute too, because I want to see how the 15-minute candle develops. Because 3 5-minutes equal a 15-minute. So if I'm looking at how it develops on a 15 minutes, I know that equals I'm sorry. If I'm looking at how it develops on a 5-minute, I know that will equal how my 15-minute candle is going to react.
Okay.
I'm also looking at a hour, and I bounce in between a day. I'll pull up the day just so I can see, like if we triggered 2 up on a day, I want to see how we looking on our range. So I'll pull up a day also, or a 4-hour, just depending on how I'm feeling. But mainly I'm looking at a 15 for price development. I'll look at a 30 to help stay in a trade. 30 minutes really help you stay in a trade.
Okay.
Okay.
I got a quick question. I'm sorry.
Yep. No, you fine.
And since we're talking about time frames and all that stuff like that, would you draw multiple, or could you draw multiple
Absolutely.
on different time frames? So say for instance you draw one on the year and then draw another one on the quarter, then draw another one on the month. Would that be something that's plausible to do as well?
Absolutely. You can do that. I will say, so I write down all of my analysis when I'm like before I take a trade. So I have it written down. I don't want to have that many fibs up because it'll get confusing. Like you'll see a 618 and you'll say, where is that from? What period
Right.
is that from? So
Right.
I will already have that written down. So if I'm looking at a monthly chart and it's at a 618, I will write down the level of the 618 on a monthly so I can keep that in mind.
Got you.
But then if I go down to a daily, it'll be a different level.
Got you.
The higher time frames will always tell you where the actual trend is, the overall trend.
Right.
But the smaller time frames just help you, get entries and things like that.
Gotcha. Appreciate that.
So to go back to our example of the uptrend, you see how we have this move like this, and then we continue up. We have like this kind of motion right here. So you can put fibs on each retracement to see to gain entries. And I do want to stress, not only do you want to use fibs in conjunction with something else, like another strategy, another indicator. You want to have confluences when it comes to Fibonacci retracement tool, but you can only use fibs in trends, an uptrend or a downtrend. If you are trading sideways, a Fibonacci retracement does not tell you anything. So if you look over here and you notice that we have this this range right here, how we were just trading sideways, you can't put a fib anywhere because you're just going up and down. There's no direction. The fib has no purpose there. The fib has purpose when you are in a trend. Okay, I wanted to reiterate that. So if we're looking at the uptrend portion, one of our confluences could be we were stuck in a range, we broke out, and then we retrace back to a trend line after breaking out of a range. So we can look at it like that. So one thing we can do is put our fib down here, put it to this swing high. And it's hard to figure out where you want a fib when it is in a range like this, when you're looking for that swing low. You can either pick one or you can just go to you can make it like a support level. So wherever the support was, you see how we have a lot of touches right there. You can put it there, you can put it on this swing low. It's really, it's really relative of how you want to look at it. You're really looking at this as a range, like a zone, more so than just the line. So you're looking at the zone. So for me, I picked this swing low. This was the most reactive swing point. So I picked this level right here. I drew it from the bottom of here to the top of this swing high. We seen signs of a reversal. We had 1, 2, 3, 4 2-ups, 4 green days. We got our first sign of a reversal. So I would be thinking puts. I would be thinking this is a put entry. And if it confirms, if we go 2 down, this would be my immediate target right here. Right? That would be my immediate target if I was trying to short this. Now, if we were looking for a reversal back up to the upside, because this is a low probability, if you try to short in an uptrend, you have a lower probability of you hitting your target. This worked out in this favor. So instead of trying to short it, I would be looking for a reversal back up to the upside or a TTO back up to the upside. So it gave me signs of a TTO with the shooter candle. It confirmed it going 2 down. It did not take out this previous low right here. So that is telling me that it is a better trade to have this bounce off the 0.5, the bounce off this trend line to go long here and looking for a 2-up to target this high. Does that make sense?
So you're saying that you would draw the fibs at that first sign of a reversal at that shooter candle, right?
Yes, I would draw it here.
Mhm.
I would draw it here because this would be my first sign. So let's say I caught it on this day, right? Let's say I only trade SPY and I trade SPY every day, and I see that it shows me signs of reversal. The first thing I would do is I will put the fib to the high. Now, if it goes 2 up, then I'm wrong. I'll just keep walking it up. But this is showing me signs of reversal. So since it's showing me signs of reversal, I want to see where could it, or I'm sorry, I don't want to say reversal. It's showing me signs of a retracement. So
Mhm.
if I'm seeing those signs, I want to see where could it possibly retrace to give me an entry to go back up to the upside. Now, if this goes 2 up after I drew this fib there, cool, I was wrong. I'll just keep following it until it gives me a 2 down.
You keep walking that fibs
you
up
just-
to that, keep walking up to that top level, right?
You can just keep walking it up. That is another thing you can do it. You can do it like
Okay.
that.
Okay.
But let's say we didn't catch it on this day. Let's say we are doing analysis and we caught it on this day. Like this move has already happened.
Mhm.
Now we can say we already had our retracement. Our retracement was off of a 0.5. It's at a trend line. We had a little trend line break, but it's off a trend line. And so if we go 2 up tomorrow, that will confirm this being a higher low. And I know that my target will be up here because the chart is telling me that we are still in an uptrend. We are in an uptrend right now. So if I know the rules of an uptrend, I know we have to have higher highs and higher lows. We already put in a higher low. So what would be the next thing to do? To put in a higher high. And my mentality is I am right until proven otherwise. I don't want to say I am right, but I want to say this is a TTO until proven otherwise. So until it shows me that this is a reversal, it has to show me that it's starting to put in lower highs or lower lows. But until that point, I'm going to assume if we already put in a higher low, that the next thing to do would be to put in a higher high. Okay.
Yep. Makes sense.
So that is for an uptrend. And now I want to show you it on a weekly time frame. Move this out the way. So let's go to a weekly time frame. If I can find my candles. So boom. You see how we have this uptrend right here? So we had an uptrend over here, right? And then we had a reversal. This was a very strong reversal. After the reversal, we started putting in higher lows and higher highs. So we know that this is an uptrend. Okay. So if we wanted to catch this first leg move right here, let's take our let me put my magnet back on. Let's take our fib from the first swing low that started the move to this swing high. And that is a 236. We are trading sideways right here. I don't really like this price action. So let's go to this swing high because this is more of a trend right here. This is a range. We're trading in the box right here. So this is the actual trend. So we go up here, we make a new swing low, still trading in the box. But what I would be looking for and what would keep me safe, you can take trades off of 236. I do not. Like I said, I use the 236 as if I'm already in a trade and it retraces to a 236. I don't think that a 236 reversal is strong enough for me to hop in a trade, but you still can use it for confluence, right? So, for instance, right here, we had a 3-2. So I can say, okay, if we have a 3-2-2 reversal up to the upside, then I could possibly get into this trade. That didn't happen. So now I'm just looking for an actionable signal to go back up to the upside. It has to prove to me that it wants to go back up to the upside. This is right here is trading in a range. So it's very hard to tell if it wants to go back up to the upside. Okay. So this something like this, I would just stay away from. It's not enough. It's not a strong enough like thesis that it wants to go back up to the upside, because what can happen is it could possibly just trade like this. It can just stay in this little range for a little bit and then eventually break out. So I would avoid a 236 entry by all means. But if it's giving you a strong candle, like let's say it gives you a very strong hammer or something like that, you can just treat it like a strat actionable signal to possibly go up. But from my experience, I've noticed when it's off of 236, it's usually chopping around. It's usually stuck in this range between the high and the low, and it's trading in between the 0 and the 236. So that is not a high probability for me. And a lot of FIB traders don't even have a 236 on their chart, but I wanted to show it to you, so I kept it on. So now I want to look for the next point of entry. We didn't get anything there. So let's see if we get something right here from this swing low. Turn my magnet back on. From this swing low to this swing high, because now we have a clear trend. We have an obvious trend. This is an uptrend. It's none of this little action right here. We have a clear uptrend. So I go from this swing low to this swing high. And as you can see, we started selling off. People were taking profit. It broke through the 382. No signs of a reversal. No signs of reversal back up to the upside. We broke through the 0.5. It touched the 0.5 to a T, as you can see, but it broke below the 0.5, and then it went to go test the 618. So after it tested the 618, this will give you a entry point. This is a strat actionable signal, a 322 back up to the upside. It's like a hammer. A hammer off of a 618 is a beautiful setup. If you see a hammer off of 618, you should be like, you should be thinking this is a high probability trade, especially if you can pair it with confluences. Like maybe it's a hammer off of 618 in an uptrend. Maybe it's a very strong support level. Maybe it's a big supply zone that it's hammering off of. When you can pair a hammer and a 618, it's usually a very high probability trade. So we have this retracement to the 618. We would be looking for calls. I would have a bias for calls. And boom, this would be our first target right here. We get it. We get it in 2 weeks. That would be our first target. Our overall target would be right here. Now, when you're using fibs for like swinging, for instance, right? Day trading with short contracts, it can get really, like with short dated expiration contracts, it can get very sticky if you put your stop loss below a 618. You want to put your stop loss, if you entered off a 618, you want to put your stop loss somewhere below the 618. Now, we do trade options, and that could be a lot out of your contract. Now, if you were swinging and let's say you took an entry up here and you were looking for it to not go below here, depending on your risk tolerance and the time you have in your contract, if you have a lot of time and you can, stomach this, then it may be beneficial to put your stop loss below the 618. The reason you want to put it below the 618, because your whole thesis was that we were getting a 618 bounce to the upside. So if it goes below the 618, then it kind of invalidates your thesis. The next place it could go is the 786, but you don't want to be part of that. You don't want to be part of that price action that's going against you in hopes that it reverses at the 786, because it could just continue to fall. So you will be holding on to a fallen knife pretty much. And that's not what you want. But if it comes back down to a 618, it tests it again, and then it gives you like another hammer or another actionable signal to go to the upside, then that's fine. So here we had the 618 bounce. We got our strat PT right here. It did not reach our overall target. Our overall target is this swing high. So if we started putting in a swing, if our next swing high was lower than this previous swing high, this is the first sign of a reversal. We just put in a lower high. So for it to be confirmed, we also have to take out this previous low, right? So for this to be confirmed, we have to take out this previous low. There's no question about it. We have to take it out for it to be a true reversal to the downside. So if you were in this trade, let's say you took your profit at your strat PT right here, right? And you're just holding on to runners. And now you want to see how long can you hold your runners for? How long can your runners make you profitable? If your first indication is that, hey, we just put in a lower high, that is a signal that we may be going to the downside. So now what I'm looking for is I'm looking for it to not take out this previous low. If it does, that is an indication that it's going against me. Now, if it comes back down to these levels and it puts in a higher low, that is an indication that it's going back up to the upside. So the reversal attempt failed. It wasn't successful. It didn't take out this previous low, so it failed. And it's going back into our favor. So that's one way you can hold on to your runners if you have the patience to do it. If it's a stress-free trade, you already made your money and you just want your runners to make more money for you, that's one way of looking at it. Like, hey, I'm just gonna see what happens once it reaches these next key levels. How does it react to these next key levels? And does it take out a previous low, confirming a reversal? If it's confirming a reversal, then I'll cut my runners. But if it doesn't even take out the previous low and it's setting back up to go to the upside, I'll hold on to this trade. Does that make sense to everybody? Do you use fib extensions for targets or just magnitude? So fib extensions and fib retracements are two different things. I really didn't want to teach you fib extensions because I don't use them. I know how to use them, but I'm really like, I don't use them. I kind of just use swing highs and swing lows and like pretty much liquidity, but I use them for retracements to see where price could possibly reverse back up into my favor, to answer your question. But the fib extension is a different tool. So I'm going to go to it one more time. You want it to say fib retracement right here. The fib extension, that's pretty much that's going to show you where price is supposed to be going. So you will go from the low to the high to the retracement, and that shows you where price could possibly reach to. That's how you use the extension tool. But I don't use it though. So another way you can use fibs, you can use fibs on any time frame. You can use them on a lower time frame. You can go down to an hour. So when you see SPY is trending, right? Let's say you see SPY is having a trend day. Now let's just pick a spot. So let's say right here we gap down, and I'm on an hourly time frame. Let's say we gap down, and then we started selling off, and I would want to see where could SPY possibly touch before continuing to sell off. I would go from this swing high to this swing low, and we have a 2, 3, 6. So for me personally, I would have to pair this with like a support or a resistance. I wouldn't take a trade off a 2, 3, 6 solely because of a 2, 3, 6. So if I looked over here, I see that we have a support, which turned into a resistance. That's a key area for it to sell off. I wouldn't necessarily be looking for a 2, 3, 6. But like I said, if the setup is sweet and you have enough confluences to build on a 2, 3, 6, you know, it's okay to take it, but that is not something I look for though. But if I was already in this trade, let's say I got into puts up here, or this was a swing overnight, and I was in puts right here, and it was selling off and it was going into my favor, and then I seen it retrace back up to a 2, 3, 6. I know I'm good. Like, oh, it only retraced to a 2, 3, 6. It's not. This is a strong trend to the downside. I'm good. Nothing to worry about. So the 2, 3, 6 is very good for helping you stay in plays once you're already in it. If you were in this trade and you see red, 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 and then you start seeing green, you might start getting worried. Like, oh, it might go against me now. It might go against me. when you see it at that 236 and it reverses off of that while you're already in the trade, that just kind of helps. Like that gives you better insurance that it's going to continue to go in your favor. Okay. So with swing trading, you see this a lot in swing trading. You ever see, and let me find like a good candle. Okay, let's say like this candle right here. Or let's say this one right here. You ever see in swing trading where you have like your call entry is, let's say your call entry is right here, right? Let's just say we were taking this as a call entry. This isn't an actionable signal, but let's just say that this was our call entry right there. You ever see it trigger 2 up for the next candle, and then it kind of just comes back down, and then it takes off? So it triggers 2 up, it comes back down. It may stop you out if you have a tight stop, just for it to continue to go back up. On a smaller time frame, it could just be making a trend TTO retracement. So that is a good place where if you hop down to a smaller time frame, let's cut this out. If we hop down to a smaller time frame, let's say a daily. So let's watch how this triggers. Let's see how it triggers. So as of right now, we have this 2 down hammer. Let's see how we trigger this. So we got a 2 up right there, right? So when you're swinging, that's why it's important to get starter positions, because what price is likely to do is to trigger 2 up, come back, retest the call entry before going up, or it can come back down and retest a fib level before going back up. So if you're in a swing, and let's say you get a starter position, like a low amount of contracts, that's what a starter position is. You want to see price retrace first before you start adding in. So the fibs can help you with that. So this will be our swing low. Let's see where price goes before it starts retracing. And then that can give us a better entry for the overall move. So let's see where it goes. So right here, as of right now, we have a retracement, a slight retracement. This candle kind of tells me that it may not come all the way down, but let's see what happens. Yeah. So you could have put your fib from, let's do this swing low to here. It's a 236 bounce, which indicates it's a very strong trend. It's not really a retracement. The first sign that I seen that it didn't want to keep coming down is it went 2 down, but it failed. Like soon as it went 2 down, they bought it right back up. So that indicated that this was going to be a strong trend to the upside. But as you see here, this is giving us selling pressure. So you might want to put your fib up here and see if it comes back and retraces. So let's see what happens. Nope, it doesn't. You can keep walking it up. So now we got our 2 down. We have a failed 2 down. We want to see if this goes in force the next day to retrace to one of our key entry points. Let's see what happens. So it's starting to retrace. And right here, it blew through all of the entry points, all of the key levels. So it blew through our 382. It blew through our 0.5. It blew through our 618. Then it closed below our 786, which is a last line of defense. So that's why you don't want to buy it just because it touched that level. Just because it gets to a 0.5 level doesn't mean just buy it. Just because it gets to a 618 level doesn't mean just buy it. Or even if it gets to a 786, it doesn't mean just buy it because it's at a cheaper price. You may be catching a falling knife. So you want to see signs of a reversal back into trend. If it's not giving that to you, if it's just continuously selling off, you don't want to be in that trade. But the importance of having these fibs up is you can get it. It pretty much keeps you safe. Like, let's see what happens at this level. Okay, it went through that level. Let's see what happens at this level. It went through that level. Okay, let's see what happens at this 618, which is where I really want to buy. Oh, it blew through the 786. I mean, the 618 also. That's not a trade I want to be in for calls, for longing something. So the fibs help you stay patient also. It's pretty much like a checklist. Like, how do you react here? How do you react here? How did you react here? How did you react in this zone right here? How did you react in that area? That's a high probability trade if you had a reversal candle or reversal pattern in the zone of interest. Does that make sense to everybody? And this is my
So that makes perfect sense. But my question is, why did you put it at the bottom of that 3-shooter? How come we didn't put it at the bottom of that first 2-shooter, or even the last last 2 doji?
Why didn't I put it? Which you talking about? This one?
So I'm not sorry. I'm sorry. Hammer. My bad. So you put it at that 3 hammer, right? You started up from that 3 hammer. Any particular reason why you didn't start from this 2 hammer before the 3 hammer?
I could have put it here. The only reason I kind of put it there because this is like sideways action. It's not really a trend, but no, I could have put it here too because this is a swing low. So you are most certainly correct to put it there.
Okay.
Put it there and keep walking it up. You can keep walking it up.
Okay. Got you.
So yes. That's just why I chose to do it. I chose to do it there because it was a bigger pivot point and it wasn't a lot of like we had a 3-2-2 down, which this is a rev strat to the downside, but it failed. So I put it here because it was a bigger pivot move.
Okay, cool.
Yep. So fibs are very relative too. It is really based on your perspective, your like whatever time frame you're looking at that on. So you may say like, hey, SPY is at a 618 level. Okay, a 618 on what? On the daily, on the weekly, on the 15-minute, on the hourly, on the month. Like, what is it on the 618 at? You may interpret swing lows and swing highs differently than the next person. So it may not always be perfect for, as the next person. But that's why I like to focus on zones, because then we have like a pretty good idea of where the area of interest is. The reason I have these gold like this, because this is the golden zone. This is where price is likely to reverse. And like I said, you can go in here and you can change your settings. You can make a background if you want. You could change the color, whatever you want to do to make it fit your needs. You can customize it to best fit you. Okay. So let's look at this downfall right here. And let's look at it on a weekly time frame. I like to look at downtrends because I know downtrends kind of trip people up when they see them. So here we had a downtrend. So this is a way you can kind of be patient and have your checklist, right? So if I want to see this overall move where price is likely to reverse from, first I'm gonna look at the first leg and see what areas did we hit before selling off. We hit a 0.618 right here, hit the 0.618, sold off. We did not reach our target. We traded in a range right here. Then we came back and we tested the 618 a second time. We tested it one time right here. We tested it a second time. And then we tested it a third time with a lot of selling momentum. That is a high probability trade because we tested it 3 times. We have a lot of selling pressure right here. That's a high probability. So on a smaller time frame, you can find a entry. And as you can see, we continued to sell off. So let's say I wanted to capture this entire move. And I'm going to bring the other fibs back in a second. So we would go from this swing high, this is the highest high, to the most lowest low right here. And I'm going to bring the other one up. Okay. So if we thought that we were going to continue a downtrend, right? We thought that we were going to continue a downtrend. This will be our checklist. Let's see how it reacts to a 0.382. Okay, you blew through that. Let's see how it reacts to a 0.5. You blew through that too. So now we would be looking for a 618 reversal back to the downside to take out this low. It blew through that also, right? So just by using that little checklist, that will keep you from going in short, right? If you're seeing bullish momentum in the opposite direction that you think the trend is going in, that should keep you out of the trade. because there's no indication that you should be shorting this. It's blowing through fib levels. You're getting continuous 2-ups. There's no reason to think short in this. And you broke a trend line. So that's one way that fibs can help you stay out of trades. Every trade isn't a good trade. You may be thinking that it's going to keep continuing to put in higher highs and higher lows, and it doesn't reach there. The fibs kind of just give you like a walk down checklist of what you should be looking for if it starts reversing on you. Let me check the chat. What is the pivot point indicator? The pivot point indicator, I have it on here. The pivot point indicator, that pretty much shows where institutions are buying and selling. Those shows like very algorithmic pivot points, aka support and resistance. That's all it is. That shows where price is likely to reverse, where they may be buying or where they may be selling. That's all pivot points are. These are essentially pivot points also, but the actual pivot point indicator it's like calculated in where they may possibly buy and sell these levels right here. And as you can see, they pretty much get respected. Let me check the chat. Can you do a few trade examples of you talking out your confluences with fibs? Yes, I can. ICT loves the extension. Yeah, a lot of people do love the extension. The extension is a good tool to see where price could possibly go. But even in the extension, the first target is the previous, if in an uptrend is a swing high. It's the 0. So that's the first price target. The extension tool just gives you other possible price targets for the long run. So somebody said they wanted to see Amazon. Let's look at Amazon.
Yes, sir. Either that or Apple. You know, we was looking at Apple.
Yeah.
Either that or I was doing Amazon before I got on the call, and I was just kind of analyzing, just going over it and stuff like that. So
okay. So first, let's see where Amazon is with this entire move. Now, when you start looking at the higher time frames, the retracement is going to be smaller. Like you're not always going to see like a 618 retracement on a monthly time frame. You can, but that was a very aggressive sell-off. When you had a strong trend like this, it's most times going to be like at a 236 or something like that. So let's see where this is at. This is the first low that started this move to the highest high. So right here, you can see, remember I said we came to that 236 and we just chopped in that range. That's kind of why I don't really care for the 236. It's usually chop whenever it comes to 236. Most times it's chop. You can catch a solid reverse off of that level, but most times it's chop around that level. So right here, we broke through the 236. It looked like we tried to come down and test the 386. I mean, the 382 right here. So we also have a support level right here, right? And if we look back in time, you can see this was resistance here, resistance here, resistance here. This was a respected level right here, right? Even back here in 2020, this was a very respected level. So we have that going for us. This is a range as of right now. So it's a big range, but this is a box. So it's just trading from the low of the range to the high of the range. A lot of indecision going on in here. Now, if we start getting something like this, like we have this swing high right here, we had this swing low, and then we break through that level right there with a clear trend, this can be a high probability trade. But if we just go 2 up and then we come up here and then we go 2 down and we come back down here, that's not really telling me too much. So Amazon, we kind of have to see how it plays out. Let me look at the daily.
But since that range is that's like a $20 range.
Yeah.
I feel like that still kind of yields some kind of good return, maybe.
For sure. for sure. I'm just looking at it from a longer time frame standpoint. It's people who literally trade ranges. They buy it at the bottom of range and they sell it at the top. Like there are people who literally just trade ranges. Even right here within the range, you had a trend. You had a trend. Still some sideways action. Like I just don't like the price action pretty much, but you still have places of point of entry. So right here, you had a swing high to this swing low. You could see where price could possibly reject to. We traded in a range again right here. Right here, we came up to a 618. We sold off, but it didn't take out that previous low. You see what I mean? Like this isn't nice price action.
Right.
It's not something you really want to be caught in. You want like the highest probability trades, unless you just trade in like support and resistance, go for it. But how I use fibs or whatever, I like to see clear direction on exactly where it could possibly go.
Gotcha. Makes sense.
So for right here, right, that was a trend on the daily. That was the swing low. It's set up for the reversal with the green 2. Then we had a 2-2 reversal to the upside. So now what I would be looking for, let me take these away. Now what I would be looking for is I would be looking for possible TTOs off of this level, off of this level, or off of this level to come back down, break the range once again, and then flush.
Gotcha. Okay. I guess I'm the type of person that would try to buy into those ranges and then short it after to get the rejection, kind of like buying into supply and selling to demand.
Yeah, you can do that. I mean, it's a range. So like ranges are very profitable if you know what you're doing, but it's not the thing about like it has no clear direction. It's stuck in a zone. Now, if you notice that, like, hey, this thing is stuck from 126 to 145. Every time it gets to 145, every time it gets to 126, they buy it up all the way up to 145. You can be highly profitable doing that. Now, at some point, you got to know that that's not going to work. Like, it's going to break out to either which way at some point in time. But while you take advantage of that time, yeah, you could be highly profitable doing that. It's just hard to place fibs doing that because you don't have a clear direction. You see?
Right. Got you. Okay.
Yeah, no problem. So yeah, just watch Amazon, see what it does, see how it reacts. It's at the bottom of the range right now. It broke through that level. So it could be possibly setting up for the downside. Maybe it comes up here, test that, and then falls. So watch Amazon. This is also that would be a supply zone. So I would just say keep a watch on Amazon.
Gotcha.
And
CCL?
I'm sorry?
You look at CCL?
Yes, Carnival. Okay. So I remember Carnival hit that like $20 level, which it was exhausted up here. It actually didn't even hit it. So first, let me see where we are within the entire move as of right now, because we're clearly in a downtrend. So it's at the 236, and as you can see, it's ranging right now. Still, like for this price action, it's ranging. It may continue to do that until it decides if it wants to be bought back up or if it wants to continue to sell off. Let me look at it on a weekly time frame. And this is why I say it's perspective. You go to a higher time frame and you look at, let's say you look at the leg on this higher time frame, like from here to here, or this entire move. If you look at the full perspective, then we're approaching a 0.5. We may be approaching a 618, which is a very high resistance turn support if it comes back down here. So before, the 618 level was a very strong resistance, as you can see. We bust through it. We may be coming back down to test it again to get bought back up. So it's important to do analysis on different time frames. Look at what it's doing overall. What is the overall move? You may be looking at something on a daily, but maybe it might just be a sell-off for a few days or a sell-off for a couple of weeks. But if you look at the entire move, it may be telling you a different story. But let's look at how CCL, has been performing as of right now. So if we go from this swing high to this low right here, this isn't a swing low yet because we would need a 2 up to validate this being a swing low. This is one of those instances where you have to just keep walking it down until it gives you a retracement. But as of right now, last week we opened down here. They tried to buy it up. It got into close to this 382 zone and they immediately sold it off. It's telling me that it's still bearish. It completed this gap, or it almost completed this gap right here. So they may be trying to, if it doesn't come back and test this resistance right here, they may be trying to bring it back down to 1150 around this area to test 1150, possibly buy it back up, but we will have to see how it reacts at that level. But I am very bearish on CCL, and I have been for a majority of the year.
Thank you.
No problem. Yeah, you can see how I reacted at the 618, even on the opposite side. It just served as a support, finally broke through, and it flushed. Any other tickers you guys want me to look at? First of all, is everybody on page? Does everybody understand what I've been saying so far? Because you're going to get homework tonight. So I want to make sure everybody understands how to draw a fib in an uptrend, how to draw a fib in a downtrend, how to draw a fib from each leg, and how to draw a fib from the entire move. Does everybody understand those 4 concepts?
Yep.
Okay. Somebody said QQQ.
And also too, looking at these examples, it's starting to make me understand why we buy time, because we don't know when it's going to happen and which channel it's going to happen on, but it's going to happen.
Brother, you hit it right on the head. And what I tell people, a lot is the move that you want. If you're doing your analysis, right, the move that you want, it is likely to happen. It's very likely to happen. It's just not likely to happen when you want it to happen. And we have to realize that the institutions and the people with a lot of money, their job is to take our money. Their job is to stop us out of our positions and take our positions the other way. So knowing that, we have to expect fake outs. We have to expect manipulation. Fibs kind of just help you gauge where that manipulation may have happened. Or if you're looking at a support level, that could be a 0.5, but they really want to take it to a 0.618 before going back up. That is a form of manipulation. You know what I mean? So kind of just gives you that best price. It lets the dust settle before you get in your position. That's what I love about fibs. So let's look at this price action for right here first and see what we got. So from this low to this high, as you can see, we broke through the 0.5, the 382, we broke through the 0.5, we broke through the 618, and then it got as low. It opened here, they started selling off. It got as low as the 786, which is the last line of defense. If it breaks through this, it's most likely going to take out the previous low. It got to the 786 and it bounced off of it to a T, giving you a 322 reversal to the upside. Then you would target the previous high right here. It even went a little further, giving you higher highs and then giving you a higher low. So if you caught that wave, cool, you made money. Let's focus on the next wave. Let's go from this low to this high. So now what I would be looking for is this move right here. So this is all hindsight. Everything on the right is hindsight. We got this move. We broke through the 382. We came to the 0.5. We rejected it, or we bounced off of it. I will be looking for a 2-2 reversal to the upside. My target would be this right here, this high right here. It did not completely get to it. If you took profit along the way, you were profitable, but it didn't touch it to a T, right? So then we start putting a lower high. So since we did not take out this, which is a requirement, I know this is the first sign of a reversal. right? We just put in a lower high. That is the first sign of a reversal. This was the first sign right here. But right here, this low is still lower than that one. That's the first sign of a reversal. For this reversal to be confirmed, we have to take out this low. And that's what we did. So now I know for sure we are in a downtrend. There's no question about it. It meets the guidelines for a downtrend. So now what I would be doing is once it took out this low right here, I would be looking for possible areas where it could retrace to get in puts to continue to the downside. So now it's at the 382. It rejected the 382. You could be looking for a 2-2 reversal back to the downside, or you could be looking for it to go to the 0.5. Maybe it goes 2 up again, or it goes another 2 up to the 618. You want to start looking at these areas for possible retracement areas to go back into your favor, back to the downside. QQQ. So QQQ for this time frame, for this price action right here, is exhausted to the downside. But you can also see that if we continue, if we break below this level right here, which has been serving as a very strong support, if we continue back to the downside, QQQ is going to want to sell off. It's going to sell off, and it's going to take all of these stops right here. Each candle at the bottom is going to continue to sell off. So QQQ may be bullish for, a couple days next week. It may, we may have some green days with whatever the case may be. But when you start pulling out the fibs, it kind of makes you look at things sideways. Like, nah, I don't trust that. Like, you can't fool me. I've seen this before. Just because you went 2-2 up does not mean that we're about to have a green week. You could just be buying it up to sell it back off. So fibs kind of make you look at things sideways for sure. Let's look at it on a weekly time frame. So even on the weekly, we are also putting in lower highs, and this was our lower low. So we may have a green week. We may have a green week. We already put in our lower low. It may come up here, it may fail, it may not reach its price target, but then it might just do like this action right here. Boom, boom, boom. It may come up here before coming back down. And it can't lose this level right here. This is a key level. It cannot lose this level. So that's something to look out for. With QQQ, you may have some bullish days, but don't be fooled. Anything else you guys want me to look at?
Well, I'll go ahead and look at Apple too.
We might have our drawings on Apple still.
Yeah.
Okay, yeah, we do.
My bad.
No, you good. I'm gonna just erase them.
Oh, boy, he got coin. Somebody say coin.
Coin? Yeah, I'll look at coin next. So Apple was trading in this range right here. So this was the first drop for Apple right here. This extreme move right here, that extreme sell-off. So if you were looking for it to continue to sell off, you would want to see where would price get bought up to before continuing to sell off. They took it up to the 618 to the 786, this zone area right here. It could not get past it. And then they gave you a reversal back to the downside. It started chopping around in this area right here. And now what is doing is it broke below the zone. I mean, this range right here. Now it can either come back down, retest this range. So we were just trading up and down in this range, right? We're trading up and down. If it breaks below, it can either come back, retest the range before dropping, or, which I am going to get into at some point in time. I know somebody mentioned ICT. One of my favorite concepts is the power of three. Sometimes they chop you around, they consolidate, they fake you out to make you think go short, and then they take it up. So we have to watch to see. It just broke through that range. It just lost this key level right here. We have to see how Apple does next week. If it's still looking bearish or bullish, we have to keep an eye on it. I was bearish on Apple. I said that a couple weeks ago. I was bearish on Apple. If we look at the monthly time frame, let's see where we are. So it's at a 382. Let's see if it wants to come back down and break below this 382 and start testing these key levels, the 160, the 150, and these the 151, the 160 and the 151. Let's see if it breaks below this 382. That's looking at it on a larger time frame. Let's see how it reacts to these levels as it approaches them. Coin. We're in some weird times, man, I tell you. So looking at coin from a weekly, the first thing I notice is this range that we were trading in. I love to draw out ranges. I love to draw ranges so it doesn't make me think that it's a trend. Even you can see it gave us like swing points, but it's still trading sideways. So I love drawing out the range. So let's see. This started our uptrend. That was our swing high. So I went from this low right here to this swing high. And we are currently at a 618. So we came to the 618. We tested it once, twice, really 3 times on a smaller time frame. It tested it again. It went up. It made a lower low, right? So what we would need it to do, what we would look for is coin to have this bounce off the 618. We will want it to take out this high in this little range right here. We want it to take out this high and continue up. But we are at a 618 area, which could be a good point of interest. And see, on a smaller time frame, we tested it this day, this day, this day. We tried to run up, we sold off, run up. This is a range right here. This is trading in the range. We broke below the range a little bit. This could be the start of a run up. How are we doing on the monthly? Yeah, this could be the start of a 2-2 rev to the upside. It could very well be the start. The quarter, they sold it off terribly. We have to see how it reacts on the quarterly. But coin is in a big demand zone. So this if you buy it anywhere in this area, it is a cheap price pretty much. So if coin model holds and people believe in it, this will be a great price to buy coin. So I think coin has some potential upside without looking at the fundamentals. Just technically, it has from the technical aspect, it has some good upside to it because you're buying it at a great price. If coin ever decides to get back up to any of this range, even if it decides to get back up here, you're buying it at a great price. But yeah, any questions on fibs? I know that was a lot. I hope I didn't lose anybody anywhere. Do we have any questions?
So where would you, I guess, start? What time frame would you start to put your fibs? The week or the month or the quarter, or just like I said, it just depends on what type of trader I would be, right?
Yeah, it depends on what you're looking for. So usually when I'm looking at charts, this is how I'm looking at charts. I'm looking at these are my day trading time frames. I'm usually looking at charts like this. If I'm going through my list, right? I have my day, I have my week, I have my month, and then I'll usually have my quarter up. So I'm looking at charts like this already. When you start using fibs, you like your eye will kind of get trained to where you think it is. So like you can look at a retracement, right? And you be like, that's probably a 0.5, or that's a 618, that's a 382. Like your eyes will pretty much get trained to it. So knowing that, like if this caught my eye right here, like this caught my attention, I will look at it on a weekly first and see where we at in relation to everything. Oh wow, we're at a 618. Okay, cool. Let me go look at what the daily is doing. Or vice versa. If I'm already looking at a daily, let me see what the weekly is doing. And then what I could do, so now I know that this is the fib for my overall trend. I know that right here is a downtrend. So now I want to see what could I look for in this little trend right here. So I go from this high to this low. What areas could keep this from pushing up? So it's at a 0.5 from this little small downtrend on a daily. Could it go to the 618, or will it continue off the 0.5 and validate my thesis that it's going to take out this low, right? So that's how I just stacked 2 days on each other. The first one I went from the weekly, or 2 time frames. The first one I went from the weekly to see, okay, we possibly have bullish momentum on the weekly. Now let's see how we performing on the daily. What can stop that bullish momentum on the weekly? Let's see what's going on the daily. Oh, we're at a 0.5, which is a strong resistance level. Can it break through that? And let's see if that validates my weekly thesis. So I have 2 on here. You would have to like pretty much be able to decipher which one is which. But for me, I know in an uptrend, my numbers are going to be my 236 is at the bottom, my 382, my 0.5, and then and if I'm going from a downtrend, all of those numbers will be at the top. So that's how I can look at it quickly and tell.
Right. Got you.
If all those lines like stress people out, you can color code things, you can, make it easy for you. It doesn't really bother me. I'm used to looking at it, but make things easy for yourself. Okay. Perfect. Well, if we don't have any more questions, I'm gonna give you one more chance. I know we went very long today. But if we don't have any more questions, then we can wrap this up. So last chance. Any more questions? Okay. Well, that concludes this lesson. I appreciate you guys for coming out with me today. I'm going to upload this recording. If there was anything that you didn't understand, or if you have questions later, please feel free to DM me. You can also DM Rose. Rose is really good with fibs also. So DM one of us and we will definitely get you together. I'm going to assign you guys homework for the weekend and also for next week. So they will deal with fibs. That will allow me to see where you guys are having mistakes, or if you really understand it. So I'm going to give you guys some homework. But once again, thank you for coming out, and please DM me if you have any other questions. Have a good weekend, y'all.